Okay, we're rolling. All right, welcome. It's so we're going back and looking at August 2nd, 23. This was a puts trade that started right off the open. So I'm gonna walk through the trade. I'm gonna replicate what I did, where I bought and where I sold, and then I'm going to see what I missed and what I can do better. So to give a little bit of context here, if we zoom out, um, SPY had hit like 458. Yeah, let me. Is this gonna be right? Yeah, let me do this. An hourly chart. So SPY had hit 458. Kind of really didn't want to go higher, and then started pulling back. So we were kind of on the hourly on a downtrend. And then the daily. What's the daily doing? At this point, the daily was kind of rounding off. Couple doji candles, getting close to the 8 EMA. I always like to look and see where the daily 8 and 21 is. So the daily 8 EMA is at 455. And the 21 is all the way down to 450. So go back to 5-minute. So we're coming lower pre-market. We came down and hit 452, which has been a strong support lately. SPY's kind of been in the 452 to 458 range. We came back up, hit this yellow. So the yellow is a monthly level. I find it on the hourly chart. Purple is from the weekly chart. White is from the 5-minute chart. And then if there's a red, that's from the daily chart. So we came down, hit a level, went up and hit a level, and now we're back at another level. So going into the open, we have a downtrend the last little bit here. We have a MACD sell signal at 745. EMA cross at like 830. We're holding below the 8 and the 21. We're below the 50 EMA. We're below VWAP. A little bit of support here at this 453 level. And now we're at the 8 EMA. So everything looks pretty good. I would call this a really nice put setup. If we close below 453.19, we have a straight shot to 452.17. So I'm going to go ahead and watch. We're going to watch like the first 45 minutes of here because this was the trade took a little bit to develop. So we are basically at open. Let me start this. We're at 929.18. So the market hasn't opened yet, but you can definitely see we have a downtrend pre-market, a little bit of a pullback, and we're opening in a really nice spot for puts here. So I was looking for puts on this day, and let's see what happens. Sweet red candle, definitely what I like to see. So one thing I want to take note of, watch this level down here. So 452 support, and we found 451.88 pre-market. So I'm going to zoom in here a little bit. Not that much. So right off the open, we open below the 8 EMA. See how we go here. MACD looks good. Let me fix my volume bar here. And I have the contracts are pulled up are the August 3rd 452 puts. So I do next day expiration. I sometimes I do 0 DTE, but usually not. And then I usually do like $1 out of the money. So we're at 453 right now. So I'm looking for the 452 puts. I usually aim for contracts that are around $1. $1 to $1.20. It helps keep the math easy when they're always basically the same price. So we came up. We're holding below the 8 EMA. This would be, if you want to be risky, you could enter here. Entering on the 8 EMA is what I try to do. Contracts are like a 105 right now. Nice push. Volume, let me fix my volume bar. So I got this fancy volume bar from somebody. Oh, look at that. Nice. It shows buying and selling volume in the same candle. It's real cool. Big puts move. So this is a breakout trade, right? You broke below a level and you enter right on the breakout compared to a break and a retest. So let's see how we go here. Nice big push. So these, you have to be careful with these contracts over here. These contracts get goofy. Like they don't update right. But so we went from 105 to 130 on the contract. I think that's 25%. I remember these puts getting up pretty high off the open here. So you could have taken puts there at 105. You're now at 132, 131 on the nice move. Almost no buying, all selling. A little bit of hesitation there. Are we hesitating at a level? Yep. Price kind of pivoted here pre-market. So that's a little bit of a hold up there. Okay, let's see how this goes. Getting bought back up a little bit. 3 minutes in the candle. A little bit of buying. So you can see the volume bar. We're starting to get some green coming the volume bar down here. Pretty nice breakout trade you could have taken right off the open. So the contracts went from 105 we were looking at. So they went like 25%. Still going though. Still moving. Going into the close, the last minute is always the most important to watch. Usually the last minute will dictate what's going to happen overall. So big push. Very, very, very nice push. Straight selling. Straight selling. Beautiful move. Contracts are probably like close to 150 at this point. This isn't right. They're not 130. I remember this trade. These contracts got up to like $1.48. So, and see what it does when it loses a level. It loses this level and just plows down to the next one. We didn't quite get there, but it's really nice. 10 seconds in the candle. Very nice. So those contracts got up to, they're at $1.40 right now. Oh, it's still going. Still going. So if they're at 144 right now, $37%. That's a 37% move right there. It's beautiful. Let's see if it comes down and hits this 452.17, which is from the hourly chart. Really good move. But now it's getting bought up a little bit. Okay. Starting to get bought up. It's getting a pretty big bottom wick. If you were still in the trade, I would consider definitely trimming a lot of it right here, because that's a lot of wicking. Still a red candle, but a lot of bottom wicking, so which means buyers are stepping in. Still pretty good move though. It's still, it'd be definitely worth trimming here, I think, because of these bottom wicks. Well, let's see what happens here. We're 2 minutes into the candle. Still looking good. Still looking good. So this was a breakout trade that did not give a pullback entry. I like to see pullback entries to the 8 EMA. Did not get that here. You would have had to take the risky breakout entry here. So these contracts are at, what's the ask? I think it got up to, he's got up to 149. So that's like, what did we say? 37%, 40%? Probably like, actually 105. That's more than 40%. Did these contracts go? Yeah. Yeah, 105 to 148 on the contracts is like 30 something percent. That's awesome. No, what is it? 105, like 40%. 40% in 8 minutes. Not a bad day. But I wasn't in this trade, so I was busy at this moment, so I was not in this trade. My trade was a little bit later. I didn't enter until, what time did I enter? I didn't enter for like 10 more minutes, so we got some time to wait. But let's see how this develops. So what are we at? We're 1 minute left in the candle. Now it's a green candle. So now it's definitely looking like it's gonna reverse. I would definitely be considering exiting the trade at this point. A lot of bottom wicking. Look how big that wick is. It flashed green. Look at the volume bar down here. It's basically all buying volume. And look how far you are from the 8 EMA. Like you're 35 cents from the 8 EMA. So when price gets extended from the 8 EMA like this, it will always come back. Look at any chart. Look how often it comes and hits the purple line, which is the 8 EMA. It's always going to come back there. So you can't hold positions forever. You have to take them. You have to take the profit when it's there, and you have to take the profit when you start seeing signs of reversal. Because look how big that candle went. Like, just flew up in the last minute of the bar. So all the action happens in the last minute sometimes. So big move down, big move up. Contracts are, I don't know what contracts are. Whatever. My entry was, I entered this trade at $1.13. So let's see. This says that they're 120 right now, but like I've said, that's not super accurate. So pulled back close to the 8 EMA, close to VWAP. At this point, I'm just kind of waiting to see. We made a big move down, but we also made a big move up. And the volume's pretty close. Look at these volume bars, are pretty much the same size. So at this point, it's like, I don't really know what to do. Let's just give it some time. We know 452 is a big hourly support level. So price has been bouncing off 452 and bouncing off of 458. So we're kind of at the bottom of the range. We kind of just need to be a little patient. So, but this bar is looking good. This bar would have been, you could have entered at the top of this bar and it would have been an okay entry. You would be up a decent little bit if you entered up here and now you're down there. So let's just kind of see what happens. Sort of see what happens here. Another thing I like to do is I like to keep an eye on SPX and ES. I used to watch SPX and ES like way more. I don't really look at the chart anymore, but I have them over here. So SPX is at 45.40 and ES is at 45.64. Sometimes if you're going to get into a position, like if you were going to buy puts and SPX was at 45.02, you would not want to do that. You would want to wait because SPX really respects the $100 level. So if SPX is at 4,500 coming down, it's probably going to bounce and go back up. So that was decent selling. It got bought back up. Now we got a little green bar, a little teeny tiny green bar. It's flirting with VWAP now. It's going to push up and touch the 8 EMA, which is also going to coincide nicely with that 453.19. So this was a breakout below 453.19. It broke below it, and now it's coming back up and retesting the level. So it hits the 8 EMA, instantly pushes back down. That's what you want to see. That's definitely what you want to see when you're looking for a pullback entry like this, which is a big problem I make, is I always mess these up. So what I've done a lot in the past is I see this big red candle close below. I'll wait for a close of the first candle to confirm the breakout, and then I'll enter on the beginning of the second candle. But you saw what happened there. It went down a little bit, and then it went right back up. So I think it's better to almost wait for the breakout to happen and then enter on this kind of retest here. So everything is saying puts right now. Everything is lined up for puts. We have a close below this level, which confirms that we had a breakdown below it. Now we're just seeing how it reacts at the retest. So now it's right at the level. This would be a good place to enter. Right here at the 8 EMA, right at this level. This would be a really good spot to enter puts if you trust that your system is right and it's going to go puts. For me, everything looks well for puts. The contracts are like $1.09, so they've had a super big pullback. They're nice and cheap now. Let's just kind of see what happens here. So the mistake I make a lot is buying a put down here, and then you have to suffer through this whole pullback. I'm trying to get to the point where I wait, and I wait for this pullback to happen, and I enter on the pullback. So now it's pulling back to 21. This is an even better spot to enter, because these contracts are going to be way cheaper up here. So, but the tricky part is, first off, how long does it spend at the 21 EMA? Like 3 seconds. So if you want to enter up here, you literally have to have an order set. You have to have an order set. Like, okay, if I wanted to say I'm going to enter at that level, that's not, no, don't do that. Don't buy. I don't want to buy that. Let me show this as an example. Why is this doing this? This is wrong. This seems goofy. Not right. Hold on. Let me go way up here. So, and that's not right either. Shoot. This is tricky. You gotta play with it. So look, it came up, touched the 21. You had like 2 seconds to buy your contract. So my point is that I'm trying to show here is you need to have an order set, right? You have to have an order set up there. Otherwise, it's going to be so slow, or you're going to be too slow to be able to get an order off up here. So we came up, we touched the 21, we pushed down, we closed below the 8 and below the 21. That's a really good sign. Now we're holding at 8. We're right around the 8 again. Let's see a little bit what it's doing here. Everything still looks good for puts. We're below all the EMAs. The MACD is on a sell signal. I don't like that the dark red bars are getting smaller. That's usually a loss in momentum. But let's see what we got here. Now look, we wicked off of 453.19 again. We're holding below the 8. This is another really good spot to enter. If you entered up here at the 21, you would be positive here. Let's see. So my contract's coming off. When did I enter? 9:49.15 I entered. So I'm just gonna hit buy at 9:49.19. Yeah, I remember to do trade here. So looking good, looking good. Pushing down a little bit here. This would be a really good spot to enter, as you know you've had the move go down. You've had your pullback. You rejected the 21 real hard. You're still below the 8 EMA. came up, touched this level, rejected it hard, and now you're pushing back down. So if you entered up here or up here, you'd be up pretty good right now. Everything looks all right. MACD is okay. They're not that close, so that's good. Everything looks cool. I'm still kind of waiting to see what happens. I've noticed a lot of times I lose is when I enter in the very beginning of the candle. So I'm trying to, what the frick was that? The frick, that wasn't real. Hold on, pause. I don't think that was a real spike. Give me a second here. You got to be careful with on demand because it does things that aren't freaking real. It'll spike like that when it's not actually. Yeah, see, that's not what I don't know why it freaking does that. It showed that spike up to the 21. That didn't happen in real life. So you have to be real careful with this. It's not 100. It's like glitchy. So let's keep going here. Keep going. What time is it? 9:47. So I haven't entered yet. I wish these contract prices were better also. Let's see what it got up to. So you could have entered, if you entered at this spike up here of the 21, you could have entered for 99 cents and you'd be up like 20% right now. If you entered here, you'd be up like 20%. So I still haven't entered. It's getting close though. About another minute and I'm going to take my entry. But at this point, everything still looks good for puts. We're holding below the 8 EMA. We're holding below VWAP. We touched the 21 and super hard reject. We're holding below this level. At this point, there's really nothing stopping this from coming down to this level, or at least coming down to the low of the day. We might have this little support here. So let's see. I'm about to, 3 contracts. Let me do this. My entry here is coming pretty close. So let's see here. CCC. So 949.50. All right. Last minute of the candle. It's looking real nice. Real nice. I'm gonna buy here. 15. I'm in the contracts. It says my price is 118, but my price in real life was 113. These aren't super accurate. So here's my entry over here. And let's watch how this candle goes. So I held my first one about 3 minutes. 9:52 is when I sold. So let's see how this goes. So I'm holding here, holding here. It's this candle's okay. This candle doesn't really mean anything. The really small bar, the size of the body means that the market can't really decide what to do. But the fact that it's below the 8 EMA is perfect. Okay, that bar closed. Now let's see how this next one develops. Nice. So I sold 9:52. So I got 2 minutes. I'm going to hold this for 2 more minutes, and then I'm going to take my first trim. I typically do 10% just to take some risk off, and 10% is like the minimum that I want. If I could get 10% on every trade, I'd be super happy. 10% and no losers, I'd be super happy. But 10% is what I do my first trim at. So I 118, so that would be like 120, 130 or so. So let's see how it's going here. Nice push. One thing I need to work on is holding my first trim longer. I usually trim super early, but like I said, I like to get that base 10% profit and then go from there. So really nice push so far. these contracts are not right. So my entry was 108, 118, but the contracts are probably in reality like up here somewhere. That's going to be the tricky thing with doing this. But I'll tell you what the profit was when I actually and I think once this catches up, we'll be able to see the profits. So still red, a little bit of a wick there, not too bad. So I'm getting close to trimming. I'm going to sell one here. I think I sell one right after the close of this candle. I think 950. No, 952. Okay. Sell one. So nice. See that nice momentum push? I like to cover at a momentum push. So that's one candle. In reality, I bought at 113 and sold at 124. So that's 10%. But what I need to do better is just look at this. So this is a red bar. When I sold, it was a shaved red bar. Let's go back because I want to look at that. Let me put this back to the second that I sold, because this is what I need to work on doing better at. Oh. Okay. So, because what I need to get better at doing is I don't hold long enough. I'm in a really nice setup, but I trim like super early and don't catch most of the move. So let's... damn it. Stupid thing. Frick. Okay. This is when I sold. So I sold at 952.02. That's basically right here. So look at this candle. It's a shaved red bar. That's what this is called. Shaved bar because it's basically a 0 wicks. So the price opened here and it's pushed straight down here. No buying in this candle. So I'm trimming at a 10% target, but I'm trimming just because that's the number I picked. There's no actual price action reason to be trimming here. Like, if this looks beautiful. We've had the breakout. We had the pullback. We've rejected all these levels, and now we're making a big push down. We're making the next leg down. So it's made a classic 2 or 3 bar pullback. Now it's pushing down. There really isn't any reason to sell here other than me covering profit at a particular percentage that I have picked. So what I want to try to do as I get better is either trim based on what the price is actually telling me to do, or just start bumping my targets up. Say, I'm not going to trim at 10%. I'm going to aim for 15% or something. That's what I need to get better. But so, okay, that's something I mentally need to get better. When the candle looks like this, don't freaking sell. Just hold the goddamn thing. But holding when you're profitable is like the hardest thing in the world to freaking do. So let's watch how this goes. On the flip side, though, you have to be careful because you have to cover profits. So you can't hold. Not every trade is going to be 100,000% winner. Like, at some point, you have to cover profit and take risk off, because this thing could easily find support here and go the other way. So you have to cover some profit at some point. That is a balance that I haven't figured out yet. 10% is just the number I picked, because 10% a day on average for a year is 2,400% returns on capital. It's pretty damn good. So I did that. Let me see what I did here. So mentally today, I was a little gun shy because I took a bigger loss yesterday, which I also made a video on. So I'm like real risk averse here. I don't want any risk. I just want my profit. I'm busy with the day. I want to go do other stuff. So I'm like, okay, this is kind of wicking here. Now it's pulling back. Getting a little nervous. Everything looks still good. It's just the bar is holding up. I've already taken the trim off. It's starting to kind of find a level here, and it's hesitating. It's having trouble moving. So, but one thing that's cool is look down here. Volume's picking up, so that's good. Look at the selling volume is picking up. That's a really good sign. This is a sign you should not be trimming. because that is beautiful. You want to see the selling volume come in. So let's see. Definitely gun shy. Now it's wicking again. I'm like, damn it, this thing's not doing anything. I don't want to go red. Let me just get out of this. So I'm going to sell another one at 954.17. Yeah, wow, look at that. It wicks back right up to, let's see, it wicks to VWAP and then it pushes right back down. So, and I'm also kind of like, I don't know about this. This might not be that great of a trade. Let me just take my profit and run. So 17, I'm going to hit another one. Sell. Pause. Okay, so that was okay. So, you know what? Can I undo this? I don't know if I can undo this. Yeah, shoot. I forgot something here. So let me go back, let me go back a little bit in time and show you what I really would have done. Let's go back like 20 seconds. And hit play. So I'm down to one contract, but that's okay. There was something I forgot to put on the screen. Okay, pause. So what I forgot to put on the screen, and this is important because you would have realized why I did what I did once I do this. There was a reason for selling at that specific time. So what I did is we came in here. Since I was getting gun shy about this trade, I had an order in at 10% profit. Another order. So I'd already trimmed one at 10%, and I was like, I don't want the risk of this thing reversing. It's hesitating too much. I'm going to put another limit order in for 10%. So what I would have done is, let me do this here. Let me sell. So I would have had an order on the screen like that. So that's what I forgot to do that in this video, but I'll do it for the next one because the next one was the same thing. Okay, so when the price looked like this, I had a limit order in to sell at that price, right? So let me just play this for a second here. So my order is sitting there. When price comes down, it's going to sell my order at a certain percentage. That's why it sold as soon as it made that red push down, because it came down and hit the, let me get out of this. Let me get rid of this order. So I had that order sitting here. That's why as soon as it made the big red push, it got rid of the position. So let's go back to when I sold. So price is fluctuating here. I'm not up very much. Probably like only a few percent here at this point. So, okay, it's 17. Okay, perfect. This is where I trimmed my second one. Again, it's the same. The candle looks the same as the first time. It's a red bar, shaved red bar, a little bottom wick, not a big deal. But look at the volume. Volume's way bigger. This volume, I used to not have this indicator. I got this from somebody in the trading group I'm in, and it's so much easier when you can see the buying and selling volume in one candle. Otherwise, it's just, this would be red or green based on like the default one you get from Thinkorswim. So in here, I could see the volume is really picking up. So I sold, this is like a terrible spot to trim because I'm trimming at 10% arbitrarily, not like, just look at the candle. The candle is fine. Like, you should still be holding, and volume is picking up. So that means that the selling momentum is building because the volume is building. So I trimmed again, just arbitrarily 10%. But that was a mental thing going back to the loss from the day before, where I didn't want to take a lot of risk on and have another loss, and I didn't want to sit and trade forever. So, all right. At that point, we've trimmed 2 in profit now. So we're cool. We got a runner left. And the thing I always don't do well on is holding my runners. Like, I sell runners way too early. So that's the reason I'm reviewing this. I want to see what the candle looked like and what the charts looked like in real time when I was holding my runners. So there you go. I trimmed, and then it makes another big push. I swear every time I buy a contract, price pulls back, and every time I sell a contract, the price goes in the right direction. It's like freaking clockwork. I don't know how it works or how it happens, but every time I buy, it pulls back, and every time I sell, it moves on. but I'm trying to figure that out. So that was a good candle. A little bit of a bottom wick, but not bad. It was okay. So now I sell like 10:01 is when I close this. So let's see how this goes here. And I'll explain the reason I got out of this trade. I think you'll see it here as this goes on. So we're at 452.75 right now. We kind of look. We have a little green inside bar. That's a bad sign. I don't like to see that. That means that you're going to pull back to the 8 EMA. Once you see that little green inside bar start forming, that means you are very likely to pull back up to that purple line. Like so. Now it's pushing back down. That's good. I like that. I like that. So, yeah, a lot of hesitation. Now it's a green inside bar with a bottom wick. Don't like that. Not cool. Now I'm like, oh, god damn it. Now this thing's going sideways. Now I'm going to have to sit here forever. Not cool. Not cool. And this is the really tricky thing about this. So you're sitting here, you've got this price pattern forming. You know that that's going to go back to the 8 EMA. So do you hold? What do you do? I don't know. Do you think back to the hourly chart where you've been on a downtrend for the last few days and you're just continuing on that downtrend? You're below the EMAs, you're below VWAP. Like, damn it. I hate how it does this. Let's get rid of that fake spike on this thing. Stupid. On demand. Alright, see? Fake spike gone. Yeah, so if you were in this trade here, I wasn't feeling too confident in this at the moment. Price found support here at 452.60. We're finding support here at 452.79. We've made a good move. Like, we've already trimmed 2 of them in profit. We're in, well, I don't know. Are we in profit at the moment? So my notes say that my runner got back to break even. So I wonder if this, at some point in this candle, my runner gets back to break even, which is the point really when you should sell. It depends how you want to do it. You could either use an actual stop loss, which I didn't really talk about stop losses, but my stop loss would kind of basically be like up here somewhere, right? Like I would have given, if a candle closed above 453.19, I would probably want to get out of this. So you could use the 21 as a stop, but that's kind of up there. So somewhere in this range is where you would want to exit this trade and cut bait. But for right now, like, it's cool. You're below all the levels. You're just holding through a little pullback. But this trade in particular, I didn't want to hold through a long pullback, and I didn't want to do it for long. So I just wanted to be done with this. So let's watch this develop here. I didn't like the fact that it was holding this level. If we look pre-market, what is this thing doing pre-market? Yeah, so this was a point here. This was a pivot point pre-market. See how we found that there was support here, these 2 candles and that candle. So 452.75 was a pivot point pre-market. That's why you're getting held up there. So, yep. I touched break even at that point. So now I'm sitting like a runner barely in profit. And it really sucked to have, I've lost trades before. I've actually taken profit on positions and I've had the runner, I've been too confident in the move and then the runner has gone red on me before. Sometimes I think it's gone red on me so much that the trade overall ended up being red. So like I had a winner, all I had was a runner left and I let it go red. So I really, at this point, I'm probably break even at this point right here. And I'm like, I really don't like this. I need to probably get out of this. I think this trade, I actually almost closed the contract here. I have a note that I considered closing it at like 5%, just because this looks like we're not going anywhere anytime soon. Like, we're real close to the 8. We're above VWAP. Now we're pushing down a little bit. It's okay. Probably like 5% in profit here. Let's just kind of see how this develops. So I closed at 10:01. I got out of this. And I wonder if I can set an order. Do I have an order set at this point? No. I'll show you how I have the order set. At this point, I'm like really not liking this. Also, look here, VWAP, or not VWAP, what is this? MACD. MACD's curling back to itself. You have all these red bars getting smaller. Dark red bars mean that selling momentum is going away, and as they get smaller and you get into calls, they'll turn green. So dark red bars on the MACD is not a great sign to see, and the lines curling back together is not a great sign to see. But let's see how 30 seconds close. We're still below the 8 EMA though, so it's all right. If you were confident in your setup, you wouldn't be too nervous right here. You wouldn't be too nervous. This is a trade that took a while to open up. Like, it took a long time to open up. Okay, let's see how this candle closes. Closed below the 8, closed below VWAP, but look, now it pushes right back up. Really not looking too hot. Touches the 8, but it gets sold off pretty quickly. That's a nice quick reject of the 8. That's a nice quick reject. That's good to see. Good to see. Nice move. Very nice move. Very nice move. But we have this level here. We have 452. It's like it really hesitating at this price here. So what time did I sell? 10:01:19. So I must have had an order in. Hold on. Pause. So okay. I have about 30 seconds until I sell. So I sold my last position at 15% on this push. So these prices are all jacked up. They're not right. So I'm just going to try to like estimate where it should be. Was it there? Maybe it was, I don't know. Let's see here. Probably like that. That's probably what my order looked like. I wonder if that's going to work. That might not be right, but we'll see how that works. This is basically what my screen would have looked like. So I would have said, okay, this thing's picking up some momentum, but I don't like how it's holding this level. I just want to get out of this. But maybe I can get lucky and get 15%. So we'll leave my order in here. Oh, it's going to hit it too early. Damn it. Shouldn't have done that. Okay. That wasn't right. It sold it too early. It should have sold it at 10:01:19. So, well, regardless, it doesn't matter. We'll look at the candle when we get to that price. So, it's still, look, it's hesitating at this level. I'm like, dang it, just open up. And we'll pause it here when I sold. Now it's getting bought back up. I'm like, screw this. I don't want to be in this. Okay, pause. So this is where I sold. So all three of my trims, 10:01:19, yeah. So all three of my trims have been at like terrible places because every time I sold, it's a shaved red top on the bar or a shaved red bar the bottom. So yeah. I need to work on, when I trim these, I need to not really worry about a certain percentage profit. I need to just look at what this bar is showing me, right? So the bar here at this point, it came up touched this little level here, pushed down from the 8 like pretty quickly. That was a pretty quick reject. And now it's making a big move down. Now it's got momentum. So, I don't know. It's tricky. If you go just off price action, you say this thing has an upper wick, no bottom wick. It's still going. It's got more to go. But you do have to cover profit, right? You can't hold forever. You have to cover some profit at some point. And this thing is just sitting sideways here. It's stuck at this level. If you got a chance to trim at 15% on a trade that you're not really comfortable with, this is a good spot to trim. So I'm not too upset about this trim. But let's watch what happens. So now I'm out of the trade. I got a nice little winner. I sold at 10%, 10%, and 15%. So after commissions, that works out to be like a 10% win. Perfect. I'll take that all day, every day. But now let's see, because I think right after I sold, this thing finally opened up. Let me look at my notes here. So, see, it's wicking at that level again. That's nicht gut. I don't like that. Like, got wicked way back up. Way back up. So that was a really nice trim. Let me pause this again. So, now look at the candle, though. So I trimmed when price was down here somewhere. But now look. Now it's got bought way back up. And now it's back at 452.90. Like, that's not looking too hot for a puts continuation, right? You need a solid close below this level, right? So I think I did okay to kind of get out of this based on what I was thinking. Like, not every day is going to be 100% moves. Most days for SPY are choppy, and 10-20% trades are good. And then 2 or 3 days a month, you get a trade that goes 200 or 300%. Like, every day isn't perfect. If you can scalp out 10 or 20% in a move like this, that's not a bad deal. Like, it's 10 o'clock. I'm done in a half hour. 10% return in 30 minutes is pretty dang good. But I know what's going to happen, so I want to watch this develop and see if I could have done something better here. Because if you know anything about this day, these contracts that I bought at $1.13, I bought them at $1.13, and yeah, see, that's not looking good at all. I would be like, yeah, I don't want to be in this trade anymore. These contracts went, yep, not looking cool. These contracts at one point got, I think this was like 175% these contracts ended up going. It took a long time for this trade to open up, but when it finally opens up, and we'll watch to the point where it opens up. When it opens up, man, these contracts like printed once this thing finally opened up. It took a long time to open though. So, yeah, so yeah, typically what I've experienced is that the good moves usually happen fast, right? So it's been a half hour now, 33 minutes into the market, and we've had a couple nice pushes, but really this is kind of just going sideways. So typically the good moves happen really fast, and when you just sit sideways like this, your contracts are just getting eaten up from theta decay and all that other stuff. So sitting sideways is not the best. Yeah, it's tricky. Sometimes the moves go and sometimes they go down. But this is one that takes a long time to open up, but eventually it will open up. So let's just kind of see here. This is a good bar. We got 50 seconds left. It's pushing down. If it can close below this 452.75, it should start to open up. I just didn't like how well it was holding this level. Let's see how it closes. because eventually, when price can't go below a level, eventually it's going to go up. Like the market will take 2 or 3 or 4 stabs at going lower, and if it doesn't go lower, it's going to go higher. Like they won't sit around forever. So let's see how it does here. I want to see how it loses this support level. That's a decent close. Okay, nice close. That's okay. And let's see how this moves here. That's a nice looking candle. Very nice open on that candle. And notice here, we're still below. We've never closed below the ADMA. We've been below, every candle has closed below the ADMA. So this, if you trust the ADMA, you got no reason to get out here. You just wait. Wait and see what happens. At this point, I'm cool with being done though. Like, I made a nice profit. Price isn't going anywhere, so I'm good to be done. Now let's see how it breaks. Now we're starting to push down. At some point, once this thing loses support, it's going to flush, and it's going to look really, really nice, and the contracts are going to go way up in value. So this is a nice momentum gain here. Let's see how we do. Oh, there we go. There's a nice push. Now it's opening up. There we go. So these contracts, let's see here. So these contracts are up. I don't know where we are at, but at some point these get up 35, 40% in profit. That's a really nice candle there. Beautiful. Just now it needs to have, now it's got this little hesitation right here we got to break through. Let's zoom out and see how we're looking pre-market here. So, okay, we're doing all right. But once we get below this level here, we should easily come down in this area. This is the next area. So let's just keep watching here and see what happens. But it's a cool bar. At this point, also look, volume is picking up again. So we got volume, a little higher volume, so now volume is picking up. Selling volume is finally opening. MACD is opening back up. This bar is getting bigger. Bright red bar getting bigger. Everything looks cool for puts right now. If you were still holding, you'd be up pretty decently right now. Very nice push. A good place to trim is at these levels, especially knowing that 452 has been a big support on the higher time frames. Trimming at 452.17 would be a good place to trim. I don't trade with that many contracts right now because I'm still learning, but I think when I go to having more contracts, it's going to be easier to do this because then you can trim. You have more options to trim. Like only doing 3 contracts doesn't give you a lot of options, but if you had like 10, you'd have a lot more opportunities to trim and take profit, and you can have more profit, and you can basically have a free runner. So here we come down to this 452.17. Very nice pickup in volume. Get the volume picking up. MACD's getting bright red. This is opening up. This looks real good. So another mistake I would make is I would be trimming here at this level, but look at the candle. This is a lesson I learned on Stupid fucking thinkorswim. Let me reload this. I'll tell you the lesson I learned on yesterday. Which is the reason I'm going back and looking at this trade, because I know that today these puts went 175%. Like, this is a freaking beautiful day, and I got out way too early. So I want to go back and look at why I got out so early. So the lesson I learned on Friday I was also in a really nice puts trade, and I trimmed one at 30% when it was in the same situation like this. It had come down to one of my levels, and I just trimmed because I was at my level, which is an okay place to trim, but it was the same scenario. It was a shaved red bar. Like, this thing is a huge bar, no top wick, very little bottom wick, very big volume. Like, from a price action standpoint, there's no reason to sell here, right? This thing can go a lot lower. There's no signs of reversal. So I ended up, the trade yesterday, I sold at 30%, and then like 7 minutes later, the contracts were at 90%. It just blew past the level and really opened up. So this is doing the same thing here. So let's keep watching this and see. That was a weird spike. I don't know if that was real or not. Let's see. There'll probably be a little bit of hesitation here. Where are we at? We're almost at the close of the candle. Let's see how this thing looks. These contracts are probably up pretty nice right now. Wish we had the actual percentages. Close right above the level. Nice move. Another thing to note though, but look at this. So if you were to see this, look at where the 8 EMA is. It's all the way up here. You're 50 cents away from the 8 EMA. You just had a big bar, but you have a little wick. This would be like, I don't know. The challenge is what do you do? Do you trim here because you've got good momentum, you're at a place of support, you're far from the 8 EMA? Like, you got to trim here because how far away you are, price is going to come back to this purple line at some point. So it's just a matter of how willing are you to hold your runners. And that's the thing. I'm really bad at holding runners because I usually don't get to the point where I let them run that long. Well, let's see how this develops here. Because you can use the 8 EMA as the stop, especially once the trade starts opening up and you're deep in profits. You can stay in the trade as long as it stays below the 8 EMA. But if this thing were to pull back to the 8 EMA now, you would be at break even or even red by the time it pulls all the way back here. But let's watch. It didn't really do much at this yellow level. It's looking like it's pushing below it. It's looking like it's pushing below it. We got room here. Look, we got a lot of room on SPX. SPX is at 45.32. So, but ES is at 45.55. So 45.55 on ES is at the place where you could have a 45.50 bounce. But that's a nice push. MACD looks good. The MACD lines are moving apart. Bright red bar is getting bigger. Big volume on the last bar. This is looking okay. Let's see how much of this I'm going to watch. This is already getting kind of long, and I got other stuff to do. Let's see here. So it's looking okay. I mean, there's some hesitation here. The only thing I don't like is how far we are from the 8 EMA. Especially showing these little signs of hesitation. Plus the fact that the 8 EMA is so far up there, you definitely would, if you had a bunch of contracts, you'd want to be trimming a couple here. Pretty much want to trim at all these levels, right? So if we open this up, this white line is, ignore this. This is from a different day, I think. So as this is coming down, you would want to trim at the yellow level. Well, let's just pretend this is real. You'd want to trim here. You'd want to trim here. You want to kind of trim at all these levels. because any one of these levels could become support and it could reverse there. So you got to take some profit off when you get to these levels that you've identified. But this is going to be a nice move because it's going to show that the price, it just goes level to level. Like, people think the markets are random, but they are definitely not random. They go from level to level. They go from one level of support or resistance to the next level of support and resistance. As long as there's nothing in the way, they'll just run. There's nothing stopping them. This is still looking good. 3 minutes into the candle. It's got some hesitation, but maybe it doesn't look so hot. Let's see. A lot of indecision here. Market's not really sure what to do. But if we still had our original contracts and if this price was right, 113 to 152, you're up a pretty dang good amount. You're up like almost 40%. Like, this is a great place to just take your profit and go do something else with your day. Now we got a green inside bar. Now I'd be like, yeah, shit, I want to get out of this. Screw this. I'm not holding. I'm not letting price come all the way back up here on me. But let's see. We got another minute till the candle closes. I want to watch how these candles develop. Yeah. It's really important to wait for the end of the candle because candles change a ton during 5 minutes is a really long time. So look how that changed in like 30 seconds. It went from looking like a terrible candle to now it looks pretty good. I always like the last minute of the candle. The last minute of the candle really tells you what's going to happen. The first 4 minutes don't mean shit, but the last minute is going to tell you what the price is doing. If it gets sold off in the last minute, that's a great freaking sign. Because what the market makers and what these institutions and big money like they do, they like to screw with people. They really like to screw with people. They like to fake people out and trick them. So one thing they do is they will move the price around a lot. And then they'll move the price around a lot in the first 4 minutes, depending what they're trying to accomplish. And then it'll go, the last minute is where the real true action comes from. So the fact that that was a green inside bar and we were thinking about getting out, and now it's completely changed, and now it's a red bar with a bigger wick on the top than the bottom. Now I'm feeling a lot better. I think this is going to have a really nice close to this candle. And this also shows why you have to wait for the close of the candle, because the candles move a ton. There we go. Fucking beautiful. Beautiful, beautiful, beautiful. Beautiful. Nice close. Perfect. Volume's still pretty good. Alright, let's watch this. Let's see how this does here. I think I'm going to watch this until we get a pullback, because I want to see how the pullback develops. Because at some point this thing has to come back to the 8 EMA. And I want to see how far it goes before there's a true price action signal to get out of this trade. I want to see how far this goes. God damn it. Is that real? That might be real. Let me pause this. Let me reload this and see if that was a true spike or not. Yeah, it wasn't. Fuck. Okay. That was not a true spike. Sorry. Thinkorswim. Okay. I don't know where this 451. I think this came from a different day, so kind of ignore this. I don't think this level's actually here. I think the next level was 450. Ignore this white level. I don't want to delete it, though, because this came from a future day, and I don't want to take it off my chart yet. So the next level on my chart is 450.98. So in theory, we should go from 452.17. My next price target should be 451. Let's see how this develops. Really nice move. But you wouldn't want to trim here, really, would you? Because you got a ton of room. Like you know you have like $1. You can move down another $1 still. Like your profit target at this point should definitely be 451. Candles look beautiful. Holy crap, nice. No reason to sell at this point. Like none at all. Are we outside of this? Oh yeah, here we go. So we got this pre-market level right here, and we just blew through it. We like didn't even acknowledge that it was there. So this is really nice. This is a beautiful move. This is really starting to open up. These contracts are at 183. So, okay, hold on. Pause. Contracts are at 183. I think that's about... Let's see what 183 is on our... So 183 minus 113 divided by 113. So your contracts are at 62% right now. If you were still holding, you'd be at 62% profit in 45 minutes. It's pretty good. Not even 45 minutes because we've only been in the trade. We've gotten the trade later. It's looking good. You're up like 60% right now. Now you're getting some wicking. Still looking good. Now it's wicking. I wonder, is it wicking at this pre-market level? Yeah. All right. So we got to see how this is not a good sign. This is where I would consider closing the contracts, just because you have this support here. I've gotten really screwed lately because I think, oh, this is a perfect setup. All we have to do is lose this little support. Who cares? This is nothing. And so I hold. But then this little support turns into be massive support, and this thing completely reverses. So at this point, we have a support here. We did a pretty big wick over the support. This is a price action signal or a scenario where I would consider closing a runner. If I'm up 50-something% at this moment, and this is the picture I'm presented with, I'm very likely to just say, I'm happy here. Like 50% is good. We have a high probability of bouncing at this pre-market support. We have a wick forming. We're far from the ADMA. I'm good. Let me take my nice win and just get out of here. But for the sake of learning and trying to capture bigger trades, let's watch this play out and see what happens. Okay, so I don't know. It's just whatever you feel like doing at this point. Like, it still looks good. I would probably want to get out of this because we've just made a huge move, and the moves can't go on forever, right? Price does not go one direction forever. It goes up, it goes down, it goes up, it goes down. It will go down, it will pull back to the 8, it will... Sorry. It will come down, it'll pull back up here, it'll go down. Like, it does that. You can't hold these things forever. Take your profit when you got it, especially if it's nice and you're at a place where it's likely to reverse. Now that's a big bottom wick. Definitely. Yeah. Alright. Let's see. It's still moving down. Let's see. Let's see. The nice thing is here, the EMAs are, the MACD is still, hasn't even started curling back to itself. So that's, MACD is pretty open. But look at that last bar. There was like no selling in that last bar. It was mostly buying. So let's see. Let's see what happens. I think I'm going to watch this until it pulls back. And then once it does the pullback, then I'm going to stop the real time like this and just zoom out and look at the chart, how the day actually finished. Because this is taking a long time. I got other stuff to do. But this is good though. Like, trading is boring. This is the kind of trade you want to be in. You want to be in a trade that's just going in your direction and you're sitting here just like, I don't know what to do. Sitting watching it. One thing you could do too, which I think is what I'm going to start doing as I get better, is it just depends how you want to do it. The guy I'm learning from, his rule is he stays in a trade as long as price is below the 8 EMA, he stays in the trade, and as long as it's in profit, he stays in the trade. So you basically, what that means is our entry price was $1.13. So I can set a stop loss order over here. I can set a stop loss at $1.13. Well, maybe not $1.13. Maybe like $1.15 or something to give you a tiny bit of profit to cover the commissions. So you set a stop loss at your entry price, and then you turn the screen off. Like, sometimes that's the best way to do it, because if you sit and watch every second of this candle, just like I'm doing as I'm talking to you, I was like, I don't like this, I'm going to get out. I don't like this, I'm going to get out. I don't like this, I'm going to get out. And, okay, cool, you get out, you got 50%, but then you come back at 2 o'clock and you look at the chart and you're like, motherfucker, these contracts are up 150% now. What the hell? I need to hold more. But when you sit here and watch every second, you're gonna get spooked a lot if you sit here and watch every second. So maybe that's what I need to work on, is just set a stop loss at my entry price and just disappear. Don't even look at the chart. Come back at 3 o'clock and see what happened. Either I'll get stopped out at some point, or I'll come back and I'm up 300%. I've watched some videos where professionals talk about that's kind of what they do, is they set orders, they set a stop loss, and they look away. Because usually what happens is, what I've noticed is the trades that really go well, they go all day, right? So, and SPY is like a freight train. Once the freight train gets moving, it doesn't stop. It just goes and goes and goes and goes. And I've read that in a book I'm reading. It also says price can go a lot further than you think. So you think, hey, this thing just made a 60 or 70% move. It can't go any further. And then you come back 3 hours later and the contracts are at 200%. Like, that happens. That happens. This has all the makings of being a 200% day. We're in a big hourly, like, let's look at the hourly real quick. Let's come back and look at the hourly. So let's just look. This actually looks like a head and shoulders. So there's a shoulder, there's a head, there's a shoulder. We've come down. You can see this big 452 support. We've been holding 452 since, like, what day is this? July 20th. So we look like we're finally coming down. Oh yeah, this is probably why we're hesitating at price. This is why it's important to zoom out. This 451.60 was the low on this day, whatever. Oh, this day was a beautiful day for puts. fucking red all day. What day was this? July 27th. So the low of that day was 451.55, and that's like where we're hesitating right now. So it does help to zoom out. But let's just see. I'm going to let this go a little bit. So now this looks like it's pulling back. So we have a sign here. The fact that this candle wicked up so high and it's a hammer, or I don't know what they're called. I don't get into candle names, like whatever. I don't know what this is, a hammer, whatever the hell it's called. That is a sign. That wasn't a good sign. Now look, we're pulling back. Now we have a green bar. At some point, it's going to come up and smack this 8. I just don't know when it does it. At some point, it's going to do it. But if our entry was up here, like we entered, like at this price. What price did we enter at? We entered at like, I don't know, like 453.15. We entered like 453.15 is where we entered. So we've already made a dollar move. We made a dollar move. Like that's pretty good. We're probably okay to be in profit. The tricky thing is with these contracts is when they go against you, they lose profit like super fast. They lose value way faster than they gain value because of those stupid market makers. But this thing, it's very common for this thing to go from 60% in profit. It'll come back to break even. Like break even is probably like here. So, and what you can also do, you could either set an order at break even for your entry price, or you could set an order like here. Like you could set an order here and says, hey, if price pushes this far over the 8, get me out of the trade. I had another trade like that the other day. I forget what day it was. I'll have to go back and find that one. But I actually held a really long time. Like, oh, I know what it was because I took a screenshot of it. Let me see what day that was. That's another thing. If you take screenshots, you should probably close your trade. Well, let me see. I was up pretty big. Like it was I was pumped. I basically held it through a move like this. I actually had the balls to hold. Let me see what day that was. That was July 27th. That was that other day we were just looking at that had the big red day. I had contracts. My runner was up like 56%. I was up on my runner. And I was like, oh man, look, I'm doing great. Taking screenshots of my profit. And then what happened was, it was basically the same setup as this. It made a move just like this. It came down. I was up 56% in this area. And I'm like, man, I should just take this off at 50%. But what happened is it did the pullback. And I said, okay, I'm going to hold this until it goes above the 8 EMA. So I set an order like here. I think I picked like 15% in profit, right? 15% in profit correlated to like here on the chart. So I set an order and I said, okay, if it pushes above the 8, I'm going to just take it off at 15% and I'll be happy. So it pushed up, it took it off at 15%, and then it freaking pushed down, and my runner that I sold at 15% ended up being like 200% in profit at the end of the day. And if I would have not done that, if I would have used the rule, so there it went. It touched the 8, and it's coming right back down. Beautiful. So if I would have, that other day, July 27th, if I would have set my stop at my entry price, those contracts never came back to my entry price. That would be a good day to go through and review. Because they never came back to my entry price, and that would have kept me in the trade, and I don't know what percentage that trade went, but it was big. Like it was a several 100% day. This day, I think my contracts, that the peak they got to was like, we'll look here in a second because I'm about to kind of turn this off. This is an hour. We've been watching this for an hour now. I got other stuff to do. But all right, let's watch this candle close and then we'll turn this off. Because this is a good sign for the pullback, though. You basically had a 2-bar pullback, and now look, dropping off selling volume. So when you have a pullback like this, and you have high volume, low volume, lower volume, that is a textbook perfect 2-bar pullback. 2-bar pullback on decreasing volume, that is like the best thing you want to see when you're in a runner. I need to pay more attention to volume. I read a really good book on volume, Volume Price Analysis by Anna Cooling. It's fantastic. Go read it. But she talks about like price and volume, and it makes so much sense, but I like don't really pay that much attention to the volume. I need to do that more. Because this is beautiful here. High volume, low volume, no buying volume, off to the fucking races. That was a really nice candle. So I think I'm going to stop it here because this is like an hour-long video, and I got other shit to do. So let's pause this. Let's pause this, and let's go. Let's get out of on demand. Let's go back to real life. Go back to real life. Let's go back to real life here. And what day was that? Was that August 2nd? Let's go to my big chart. Let's go to my big chart. So that was yesterday. Friday was fucking awesome. I want to make a video about Friday because you could have literally traded all day on Friday. You could have traded for the entire 6.5 hours. It was fucking perfect. Is this it? Okay, this is the move we were watching. So we just got out at like 10:30. Here's the 10:30 bar. Where's the 10:30 bar? Is this the 10:30 bar? No. 10:30. Okay. So we just saw that part of the move. So here, shit. Sorry. Okay. Don't look at this. Just look here. This is where we are. We came down. We touched the 21. We went sideways for a little bit. We kind of consolidated here for a little bit. And then it opened up. Beautifully opened up. It went right to... And what did it do? It went from this level, ignore this white level, it went right down to 451. Not only did it go below 451, it came down to 450.50. Nice. It pulled back to the 8 EMA. We held against the 8 EMA. We came back down. This is a level now. 450.54 is a support. We touched it. We bounced again. We closed above the 8 EMA. So at this point, you're probably thinking, yeah, we had to close above the 8. I should probably get out of this. We came up. We touched the 21, but we rejected it pretty hard. And then we made another leg down. We came down to 450, basically 450. 450 is a huge psychological support. So we made a really nice move. We got in up here at 453.15, and this thing came down to 450. That's $3 on SPY. That's like 150% on contracts. And then it consolidated. We found support. It came up. It chopped around here. It came up and touched the 50 EMA. So we're still in a downtrend. Downtrend. We did get a buy signal here. So you could have taken a little calls trade here. And then we got a cross. If it comes up and touches the 50, it comes down. A lot of consolidation. But then, look, if you really were patient, you're really patient, this thing came down to 449.40 at the end of the day. These contracts went a lot. I don't think I would have held that point. I think at 450, I probably would have said, hey, I know 450 is a big support. At this point, let's just close the trade. Like, I don't need to sit here all day. So let's see that contract, what these contracts moved at 12 o'clock. Let's look at the contracts at 12 o'clock. So these were the 8-3-452 puts. Let me see. Let's look at these contracts here. What day is this? Is this 8-3? That doesn't look right. What day are we on here? No, that's not the right day. That's not the right day. Like, that doesn't look right. We want 8-2. We were just looking at the 8-2 trade, right? Perfect. Okay. This is how these moved. So here, we'll look at these and then I'm going to end this video because I got other stuff to do. This is where we entered. We entered on the 4th bar right here at like 113. This was our entry. This was our entry here. And then these got at noon at 450. These got to a peak of like 265. So let's do the math. We don't have to do the math because Thinkorswim does it for us. Okay. 113. Ah, shit, I'm not going to be able to see it. I hate when it does this. Can't see it. Fuck. Ah, stupid thing. Make this window bigger. All right. So let's just do this here. So 113 was our entry. 113 up to 265, we'll say. 134%. So from 453.19 down to 450, these contracts moved 135%. That's a pretty good move that you could have traded just holding the 8 EMA. Later in the day, if you would have held all day, they did go to 175%. But where did they come back to? They never came back to break even. If you would have used the rule of I'm going to hold until my entry price, these contracts never came back to $1.13. They came back to 170. They came back to 170. If you would have held all day, they came back to 309. They actually went to 309. So if you would have entered at 113, I think that's like, okay, that's where I got 175% from. So let's go back over here. This move from our entry here down to 450 was 135%. And then if you had the balls to hold all day, which I don't know if I would have done that. I guess it depends how much you trust the 50 EMA. Because this was a beautiful downtrend. It did have some time above the 8 and above the 21, but it really wasn't going any higher. It came up and touched the 50 and sold off. It pretty much just followed the indicators all day. Eventually getting to a low, the contracts got to a high of 175% down here. But look what happened. It came down here, formed a green inside bar, pushed right back up. So it was a really nice move. Really nice move. All right, I'm going to be done here. I learned some good stuff. This ended up being a long video, but it's going to be perfect to go back and study. Thanks for watching. See you later. Bye.